Hello and welcome, everybody. Happy Wednesday, midway through the week. Welcome to the Hot Corner Live Strategy Session. We do this every week on Wednesdays at 1 o'clock. I am your host, as always, Steve Straza. I'm the Director of Research at All Star Charts. We have a couple things to talk about at the top of the call today. Not much has really changed since last week or the week before. Markets are still just experiencing a relentless bid. As you see this chase into year end, we do have the FOMC meeting wrapping up today and a little press conference getting underway here in about an hour and a half, I think. And we have a ton of new setups today, which I'm excited to talk about, because when we look beneath the surface, or when we look through any one of our scans or different universes, we continue to see more and more bullish charts setting up, more and more bullish setups that we want to be involved in. And that just speaks to the ever-broadening rally, right? We continue to see participation expand, move out on the risk curve or down the market cap scale, more and more stocks joining the party here. So we have a bunch of new ones to talk about today. Can't wait to get there. First, nothing that we discuss here today constitutes any solicitation to buy or sell any security. This is all solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, go to allstarcharts.com/terms. Let's talk about Monday. This was Monday. Yeah, we do need new blood, Joe. And I saw your ping about INSEE. You're right. Listen, it's one single day's price action. This is the heat map from Monday. But it got me thinking about a lot of things that were already on my mind. We're just going to kind of dive into, a potential scenario for next year or next quarter or even next week, right? We're starting to see the rotational tailwinds run their course. Notice all the red on this screen. There's really not a lot of it. It looks like a lot because the way a heat map works is these squares are sized based on market cap. So notice how all the biggest ones, these are your market leaders. These have been the best stocks. Magnificent Seven and friends, right? You see Apple, Nvidia, Microsoft, Google, Meta, Amazon, Tesla. There's your Mag 7. Lilly also got hit with some pretty severe profit taking on Monday. But then look at the rest of the board here. Pretty much everything else, it's a sea of green. And it wasn't even a market cap thing, because Broadcom really stands out to me. It's been on an absolute tear. That's ticker symbol AVGO. We're going to get to it in just a minute. It was up 9% that day. It's not even like they were flooding out of large cap tech and into other things. They were flooding out of the winners. And it looked like reparking that capital or that cash just in other large cap tech stocks, other large cap growth stocks, just an assortment of things. Very bullish, constructive rotation. Let's talk more about the Magnificent Seven. Up almost 100% this year. It's an equal weight index up top here in blue of really the 7 largest and best stocks. If we were to remove those 7 stocks from the S&P 500, we're up less than 6% this year. Now, that does not suggest that only 7 stocks are working. That's the flaw in the way that this is kind of portrayed. Oftentimes, 7 stocks might have done most of the work driving the gains at the index level. It's not those 7 stocks' fault, and it's not any other stock's fault, right? It's simply due to index construction. These stocks make up, more than 50% of the NASDAQ. So, of course, they're going to drive most of the gains. This is just, we're talking about index attribution here. It's not Coinbase or Uber's fault that they're not even included in the NASDAQ 100 or S&P 500. Right? Uber just got added. It was a really big deal. But they couldn't contribute. They're not even in it. And then there's a ton of other stocks that are doing well or have done well, but they have maybe a 2% weighting, 3% weighting. So yes, most of the gains in the index were made by the heaviest weighted stocks. they've also been some of the biggest leaders. NASDAQ 100 up about 50%, S&P 20%. Could we enter a world next year where this black line, the, large caps X Magnificent Seven, maybe flips up to the top and has, a really big year, and then maybe this Magnificent Seven index kind of, just moves sideways, consolidates, underperforms? I think so. I think that's a real possibility that we want to remain open to. This is the one-day rate of change on the Magnificent Seven ratio versus the equal weight NASDAQ. So Monday, this day right here, that looked like a bloodbath for the biggest, heaviest weightings, but great for everything else. It's the biggest dispersion that we've seen, right? So the biggest down move in this ratio, which just illustrates that the Magnificent Seven underperformed a bunch that day. Biggest down day for that ratio in over a year. We tend to see volatility like this, right? Or a big kind of dispersion between the winners and the losers, or the winners and everything else in this case. We tend to see that at turning points. I think maybe this is a turning point in this ratio. It also makes sense, seeing as the Magnificent Seven itself, this is the index of those 7 stocks, running right into those highs from, I don't know, a little over a year or two ago. 2 years ago. And then also notice the relative trend in the lower pane here. It looks a lot like some other relative trends that are dealing with, a shelf of former highs right now. Here's equal weight tech versus the S&P. Here's a NASDAQ 100 versus the S&P running into those highs. And compare that, right, with the Magnificent Seven running into those highs from 2 years ago. Talking about the ratio in the lower pane here. And then growth versus value. Because in large part, these ratios are driven by the biggest or heaviest weighted stocks, the Magnificent Seven. They're all going to look the same, right? If growth versus value fails here, you'll likely see this, Magnificent Seven versus S&P 500 X Magnificent Seven ratio down here in black, probably seeing this roll over, fall back below those old highs. Now, does that mean that the Magnificent Seven stocks are not participating or going down? No. They could just be underperforming everything else for a change. I think we also need to remain very open to the idea that if money rotates out of these heavyweight top performing stocks, it doesn't necessarily have to go into value, right? The growth versus value ratio might start to suggest that, because it's driven, again, in large part by the heaviest weightings, it's Magnificent Seven stocks. But can it just rotate out of growth, maybe into other growth? This is ARK Internet. We love using these ARK indexes to illustrate, I don't know, the most speculative tech stocks, most risk-on growth stocks, long duration equities, non-profitable tech. Well, here's ARKW relative to the S&P 500. Not only do we have a primary trend reversal printing on absolute terms, the relative trend in these speculative growth stocks also is indicating more gains in the future, or continued outperformance, or outperformance over longer time frames. So if it's not the Magnificent Seven leading the way anymore, it doesn't necessarily have to be value. It could be some value. It probably will be. But it could also be other growth. Now, I'm not suggesting that the NASDAQ 100 or any of these indexes that are driven by these 7 stocks is going to stop working. I'm just suggesting that maybe it won't be the big outperformer that it was in 2023. In 2023, there was the NASDAQ 100, and then there was everything else. If we move away from that world as we head into next year. But I cannot be, more clear about this. This isn't a bearish takeaway on the NASDAQ 100. Look at the price action as this was going on. Monday is just, 2 candles ago here. So still a really nice day at the index level for the NASDAQ as money was rotating out of those biggest winners, Magnificent Seven. When we zoom out a little bit more, we have a weekly win streak that we haven't seen since, we were still trending higher before the old all-time highs back in 2021. I think we're going on 7 weeks here, 7 straight up weeks. So really, really just clear bull market behavior. I'm talking less about the absolute trends here. They still look not just fine, but great, excellent. Talking about the relative trends. And I think it's important because a lot of you, or a lot of us, are in these Magnificent Seven stocks. They've been really good to us this year. They've been the leaders. That's been the right call. I think we've been pretty obnoxious about big cap tech, mega cap tech, talking about how these mega cap growth stocks are going to dominate this AI revolution, right? That's been all the craze this year, talking about how the leaders keep leading, talking about how tech tends to lead in bull markets. It's been the right playbook. Just think maybe that changes, and it's probably time to maybe feed the ducks a little bit, take a little bit of profits in those things that have worked so well, and plan for maybe a new leadership regime where, not that they're not working anymore, they're just not leading. We're seeing, like I said, more and more bullish chart setups, more and more long opportunities that we are really interested in come across our desk every day. Let's talk about some of them now. First, here's an old one. We got to talk about Broadcom, right? Not included in the Magnificent Seven. If it was the Magnificent Eight, I think Spencer made a joke. This is the 8th wonder of the world. Not a part of the 7, but Broadcom would be next. It's a huge company now, market cap from market cap perspective. And boy, is it seeing, I think, some rotational tailwinds this week as money is coming out of some of those leaders. Broadcom has really enjoyed a couple of nice daily candles just here this week. Really started last week. So in the middle of its range, you really wanted to buy that retest of 900 last week. It's moved on now, already back above 1,000. Our price target for it is 1350. I don't know if you get another retest, but we do like it against those pivot highs down around 900 if we do. Now let's just talk about some new ones. We talk about the relentless strength from Uber. ServiceNow has a similar, just relentless rally that's been going on for the past month and a half off of those October lows. I think ServiceNow is one of very few stocks that has had momentum overbought for as long as something like Uber. So just a relentless bid for ServiceNow. Back at those all-time highs, called 708. We're above 708, got to be long. Price target 938. UiPath. This is one of those ARKy names, ARK Internet names, right? Not back at those old all-time highs, not even close, but the reversal is in. Reversal's in, taking out those highs from last summer, $22. We're coiling. We took out the breakout level and just been coiling really high and tight the last 2 weeks now. I think it was earnings that popped it above those pivot highs and the highs from last summer. So against 22 all day, we like it long. First target 40.75. And look at the relative trend. What we want to see. We talked about that. Just like ARKW, you got a reversal in absolute terms, but also a reversal underway in relative terms. That's what we really want to see in these setups. Jackson Financial, JXN, CEO, vice chair, executive vice president, 3 different insiders for just almost $1 million worth of shares last year. Giant consolidation breaking out here above 48. Highs from earlier this year, highs from early 2022, both at this current level. I think this one is incredibly actionable right here, right now. If we're above 48, want to be long Jackson Financial, the target of 63. Waste Management, lower volatility, more quality name. It's big one, large cap, nice dividend. So for anybody who is into shareholder return names, this one just announced another dividend increase and also authorized an even larger buyback than they already had. So Waste Management, if you measure out this little consolidation, this nice little base here, above 175, we could be long with a target of 211. AIG, well, ain't that a blast from the past? American International Group, Form 4 filer just from this summer. And this one's like, boy, almost a decade-long breakout at this point. Massive consolidation here. Look at how many touches we have at the upper bounds of this range, around 67.50. This one looks like it's going right now. We're talking, we talked last week. Go watch last week's video if you missed it, about how financials are interesting, And my spiel about the growth versus value, maybe it's other growth and doesn't have to be value, doesn't mean it's not going to be financials. I think financials definitely catch some nice rotation into next year. It's already happening. So this chart looks as good as any in the space. Insurance has been really good. Above 67.50 in AIG, we like it long with a target of 100. How about this one? Another insurance name, I believe. Similar setup, even longer term, though. Goes all the way back to those pre-financial crisis highs, which line up perfectly. At the upper bounds of this range, call it $26. Form 4 filer from May. We're above 26. Long CNO, target of 42. Check out the chat real quick. Tesla. Yeah, it's not really a recall, I guess, that Tesla news. Be careful about that Tesla news. Oxy, is this where Warren steps in? Doesn't look that way. Doesn't seem that way. We have been waiting for Warren to step in. He hasn't. I'm going to guess that he doesn't and that he's done. Also, I know he's not a technician, but these tops are looking like they're going to complete in energy. So I think that's an area that we're going to want to remain cautious towards energy. It is so hot in here. There was a hedge fund rebalance on Monday. I don't know what that means, right? Hedge funds don't really rebalance. They're not indexes. They're actively managed portfolios. I don't know what would be rebalanced in the hedge fund world. It was a known sell. I don't know about that. SQQQ, when Powell speaks, I don't really mess around with any levered or inverse ETF. I like options. When I need or want leverage, I go to the options market. So they're not for me. In fact, my good friend Carrie was talking about, I think it was the SOXL on the morning show today. Not for us. We stay away from those. There's a lot of slippage in those funds. NVIDIA long? Sure, go for it. NVIDIA's good. How about Boeing? Yeah, looks good. We talked about it yesterday. Adam Kush, go watch the interview on the morning show. Not my favorite. Steve, which healthcare name do you like the most right now? Maybe some biotechs that have ARCI-like basis. This isn't the kind of market where I want to rush into healthcare stocks, right? Healthcare tends to have more of a quality or value tilt. So if I am going into healthcare, I'm going into medical devices, med tech, or biotech. I want the techiest, growthiest healthcare stocks, right? Healthcare has a defensive character about it, particularly the large cap, the sector spider, XLV. Is a very defensive tilt in that index. So this is a bull market. I want offense. JC's UNH. Yeah, listen, he's been right. UNH is a great stock. It's been good for a long time. I want to move a little bit further out than UNH on the risk spectrum, though, considering the price action that we continue to see, right? Riskier, more offensive stocks working. Yeah, biotech, but pharma and some of these more defensive healthcare names, I don't think so. Say the same thing about consumer staples or utilities, right? It's just not that kind of market. NStar Group Limited. Here's another new one, ESGR. CEO is the Form 4 filer just last month in this one, $10 million. A big buy, buying pretty much strength, right? We were legging higher off of those October lows. You see it right here, legging into this breakout level, and he's buying this rally. The CEO in size, $10 million. This filing really stands out. So we want to follow him right into this one. 290 and 287, long above those 2022 highs. Beautiful chart. If we're above 287, long, price target 360. Let's do cryptos quick and then get out of here. This is the altcoin index. So I think a new bull market in crypto is very much underway. We do luckily have some vehicles. So this is the 10 largest altcoins at one point in time years ago. And I'm leaving it that way. I'm not changing it because I have price history in this index. I'm not going to recreate a new altcoin index every time there's movement in the top 10 by market cap in crypto, right? That wouldn't make any sense. So I think this one does a really good job at illustrating what's going on beneath the surface in the altcoin space. And all we continue to see is more and more of these altcoins, the strongest ones for now, completing just textbook reversal patterns. They look just like this, right? Look how clean this one is. You can't buy this, but really clean. Finally got the breakout in a big way. And we continue to see more and more cryptos, enter new uptrends, complete these reversals beneath the surface. I think it's time to be very aggressive in crypto. Luckily, we have some great vehicles. We like MicroStrategy, 500, target 885. Got a little bit of a coil going on in MicroStrategy right now. Let's see what it's doing today. I'm just not that big of a fan of the Bitcoin miners. I think, there's some really nice, convenient, simple ways to get long crypto in the equity market. And I just think you're complicating things to try and get behind some of these Bitcoin miners. They are up nicely today, though. And then the other one outside of MicroStrategy would be Coinbase. Look at the coil in Coinbase since last Monday. Super high and tight. Can't see it so good here. Pull it up on your own. I'm looking at it on my other screen here. 160 is the next stop for us for Coinbase. It's also the 38% retracement. We don't have it drawn that way, but this is the 38% retracement. I don't think you see 115 again. I don't think you see a retest of this base breakout level. If you do, any and all weakness in a stock that's been working this well and just completed primary trend reversal, any and all weakness should be bought. So if you do get a retest of 115, that's really where you want it. I think you might have to end up, if you're not in it yet, just buying the resolution of this current coil. I think you could drop a VWAP from last Monday, right? That little gap, and play it that way. But I think it's just about done around like 145 or strength above 160. Don't go chasing these. We talked about last week Coinbase and how extended it is, from a distance from 200-day moving average perspective. A lot of these trends are extended. Doesn't mean they can't get more extended. Like we talked about, some of the biggest streaks I've ever seen in overbought momentum for the leaders right now. But you still don't want to chase, especially in an environment where there are so many bullish chart patterns, new opportunities, things just now breaking out. I wouldn't go chasing something like Coinbase. Be patient. You will get an entry. Before we go, Ethereum. I know it's not a hot corner name. It's not a hot corner name. I'm crazy, right? So Ethereum is one of the big boys. This is what I tell my friends and family, like, why not just own the mega cap cryptos, right? Get some sort of exposure. It's a lower risk, lower reward type of setup, but probably a lot safer than dabbling in some of these other alts. And Ethereum is technically an altcoin, but I consider it, it's a mega cap crypto right behind Bitcoin. You just got the base breaking out right here, call it 2050. We shot right to about 2400 and now just getting a hard retest, quick little throwback, getting bought up. I added more on this retest. I think this is just a beautiful level to enter in one of the biggest, most established cryptos out there. I think it's an excellent vehicle and you won't have a better place to buy it than here. And then just for perspective, I think this is fun, right? I'm not saying that 26,000 or 26,500 is my price target in Ethereum, but I am saying I wouldn't be surprised if we get there. To look at something like this and say, oh, wow, 10x from here, 12x from here, that's crazy. It'll never happen. That's impossible. Well, go back a few years. Last time we had a similar textbook reversal pattern print, we did get about an 11x, 12x move. We were up 1,173%. So I'm posing the question as a thought experiment. Why can't that happen again? Why wouldn't it happen in a similar way? And if it does, what kind of price are we looking at for something like Ethereum? 26,000. And yes, I think that puts it at like a $3 trillion market cap. I know. I understand that. It's a bull market. So this is the way that we want to be thinking, right? This is a possibility. It's not crazy. It wouldn't surprise me one bit. Not saying that we go there, but I am saying if you're looking at Ethereum, buying this around 2000, saying, oh, what am I likely to make? We don't know. My price target for Ethereum is higher and my time frame is sometime in the future. New uptrends are underway. Guys, that was it. As always, thank you so much for joining me. I just love doing the show. I love interacting with everybody in the chat. Thanks for hopping in here and participating in the chat. As always, any questions, comments, concerns, want to say hi, info@allstarcharts.com. And let me just check the chat, make sure I didn't miss anything yet. Avalanche price target, banana peels, higher. My time frame is longer. IoT could go, sure. What do you mean by these tops are going to complete? Pull up a chart of Oxy or a chart of Chevron or a chart of Exxon. We're putting out a short setup on Exxon today. And you'll see the tops, right? Just kind of hanging out around those pivot lows. Those patterns complete. It's the opposite of what we're out here talking about with this ARKW and this altcoin index, right? It would be that pattern, but upside down, which would indicate a new downtrend phase. Coin, who's your daddy? Yes, Mary, coin looks so good. I'm such a fan. Not much to gain in UNH. It's not that it's not a good stock. It's just not the stock you would expect to outperform in the bull market, right? I want to be in the leaders. I'm a big relative strength guy. I want to be in the stocks that are not just moving up, but moving up at the fastest rate. It's not anything against healthcare outside of the fact that I don't think those are those stocks that are going to give you that outperformance. That would be the first time ever where you see a health insurance name, have the highest beta or, outperform in any material way during a bull market. All right. Thanks, guys, for joining. As always, we will see you here next week, same time, same place. Enjoy the rest of your week.